Hi there. Thanks so much to SCB for organizing this event. We're quite blessed today. You have me, but most importantly, you have a good friend, Michael, here from Chainalysis. Michael is an engineer by training. He has a PhD in quantum physics, but for some reason, he decided to leave those fields and join the crypto space from the beginning. He's a true OG. He's been a researcher, a product builder, and most importantly now, founder and CEO of Chainalysis. Over the last few years, I've had the pleasure of getting to know him. Most importantly, this past April, we led their Series F. So Michael, appreciate your presence here and excited to be talking with you.
Likewise, and I can only share that it's been a pleasure to get to know you better, and it's been a couple of years now, and it's been great and increasingly more fun.
Awesome. So let's take it to the beginning. Talk to us about the founding of Chainalysis. So what vision did you have for the company back then, and over the years, how has it changed?
Yeah, that's a good question. So I was been, as you say, in crypto for what is now 11 years or so, and initially looked at like what are the business models you can even build in crypto. What is it all about? What are we actually? What is a crypto space like a thing? And I think in that process, I started to see the analogy with the internet of the 90s. What happens in that time? What was really brewing? It was these techies that got crazy ideas, and slowly we could just see that this technology were about to change the world. And I saw some of that happening in the crypto space as well early on. Then one of the first companies I was part of was Kraken, where I was one of the founders and co-founders and chief operating officer there, and got deeper into the financial side of crypto and understood really well what does it mean to run a financial service business. And in that time, I also met with regulators, with banks and others, and also law enforcement in certain capacities, and suddenly realized that like finance were a lot of more things than just moving bits and bytes. It was all the supporting things around it. And then I also thought about what was the first message in the Bitcoin blockchain. It was about bailout of banks. It was about a financial crisis. It was about lack of visibility into what happened in a financial system. And all of these things led me to think like, if crypto is going to eat the world of finance, like the internet basically ate the world of information and communication, then this is a key opportunity in the time of the world where we can get like far better visibility into what happens in finance, level the playing field, enable new actors to be part of finance, and basically build a data company that can provide that guidance to customers and to everyone that's basically active in crypto. And that was the dream about Chainalysis. And then I also identified in that process, like the earliest customers of this was really with urgent needs. And they were the traditional stakeholders of finance. They were like the financial institutions in the space, of course, being crypto exchanges and banks. It was regulators, but it was also, most importantly, the law enforcement agencies that really prefer to be able to follow the money to solve a crime. And you need to follow money in crypto. You need a product like ours.
Absolutely. I'll come to the law enforcement part in just a second, but question that I think people might have, sort of blockchains are by definition transparent, all the data is put on chain. What makes it so sort of difficult for players in the space to monitor the data and make sense of it?
So if you done a crypto transaction, you probably at some point entered a block explorer and looked at it, and you looked at other blocks and other transactions, and you can basically see all of the people being active there. It's all happening live in front of your eyes, and at the same time you have no idea what goes on. You might see an amount, you might see a smart contract being invoked, but it's really, really hard to grasp. And the thing is that like understanding data at scale makes much more sense if you can somehow aggregate and build an algorithm about how to organize those pieces of data. And what we built in Chainalysis is basically an algorithm that can assess whether two transactions are done by the same individual or two different ones. You would call it like a PageRank of crypto. It's like this very simple algorithm that enables you to constantly improve the algorithm and at the same time organize your data. And now you can move all of the billions of transactions that's really hard to understand into a relatively simple knowledge graph of what goes on in the financial system of crypto. And suddenly you're like really smart about what goes on. You can understand it, you can navigate it, it's easy to comprehend. Someone could be Michael, send someone could be Karan, some funds at a certain time. And now you can see what other funds they send to each other. And it's all organized the way that you comprehend it. So that's what we are doing. And in working with our customers of various kinds, we continuously improve the ability of that algorithm and the data set. And that makes it just like much easier for our customers to navigate the otherwise pretty complex space of crypto.
Yeah, absolutely. So I think it could be useful if you shared like a sense of the scale and breadth of your data platform and just how many sort of like, different things you have to monitor to give customers useful solutions.
Yes, so we have like everything we build is around our data platform. On top of that, we have different products. But to delve a bit with the data platform in itself, we are running like thousands of different nodes on different blockchains, multiple nodes on each blockchain to be like ensure that we have the best possible coverage. So basically have like probably the biggest coverage of node as any company in the world. We collect data from, for example, as I mentioned, the ability to just like aggregate and cluster addresses together. We do our own intelligence where we, for example, transact with exchanges in countries we don't know about already. It could be with illicit sources where we have different licenses and partnerships where we can do that. And basically map out both the underbelly and all the lit and interesting services in crypto. So that creates like a very good, I would say, phone book of the crypto space. Then on top of that, from that, we can assess through machine learning what types of services everything else is that we don't know already. We are able to, from, for example, analyzing transactions at time of day in a service to assess where is it in the world, where is the users of that service in the world, because we can also see their time of day of transactions. So there's a lot of things we can infer from our data set and give like a very strong image of like what goes on. We can also like search for some of the transactions and addresses in different forums where they would typically appear. And that can actually lead to other pieces of data that you can add to it. So it's basically this data gathering that gives more and more information about what's going on in the crypto space that our users can then use.
Absolutely. So in terms of your sort of customer set, if you could speak to some around sort of selling to the public sector, specifically law enforcement and the regulators, I'm curious on the way you built that business and the use cases which you see them using from your products.
Yeah, so it was like there was kind of two sides that got me into to work in the law enforcement. The first one was Mt. Gox, the case of Mt. Gox, a big exchange that got hacked back in 2011, 12, 13, and then they went bankrupt in 2014. The Bitcoin market crashed. I got involved in that investigation, worked with Japanese law enforcement, got introduced into law enforcement in the US, and started working with Katie Horn and one of her investigators. And there was on another case around two federal agents that had been stealing crypto from the Silk Road investigation a few years before. So a lot of like interesting, colorful cases. And in that collaboration and helping the law enforcement agencies, I also learned that they really needed easy to use products that could help them navigate this like sea of data that they otherwise couldn't comprehend. And we had just developed the product, basically had made it ready. We didn't know whether it would be law enforcement or the crypto exchanges that would be the first like biggest customer group, but it was clearly that there was a need in the law enforcement space. And then we did like a very interesting thing for government sale. We basically sold bottom up. We talked to agents, to investigators, and they had like urgent needs, and we had a product. And I think the first law enforcement account that of recurring revenue that we sold was actually sold on an expense credit card from a law enforcement officer that was so desperate to figure out his case, so he just had to buy it now and not go through procurement cycles in the public sector. So you can actually sell bottom up to government, and then slowly as the awareness around crypto grew, all of the successes of the cases being solved, then the awareness like got levels by levels higher up in the system. And that was the same time where we as an organization got better and better at selling, I would say, first mid-market, then enterprise style deals. And we kind of grew our sales motion into government with the awareness in government. So it's probably a very rare example of how you can start with government first and then get away with it.
I've been investing in like software for a while now, and probably one of the few cases where selling to the public sector was on bottoms up. I'm curious on if there are like sort of like one or two cases which you're most proud of having solved or been a part of.
Yes, and I would say like we have a lot of cases that we've been part of, and usually the way that we work cases is that it's a mixture of like us sometimes finding something first, us sometimes helping because law enforcement wants help from us, and working closely with the law enforcement. We never solve it completely alone, right? Because this is always a partnership, and law enforcement have a lot of capabilities and knowledge that we don't have, and they also have abilities that we don't have access to. We can't subpoena and exchange or anything, for example, right? So that's part of it. But and we work with different intelligence law enforcement agencies. So there's a lot of cases we've been close to that's like very near and dear and very important high profile cases there. I think one of the ones that got some mentioning in the press recently and was a case that we worked on for many years was the takedown of the biggest child abuse material site, Welcome to Video, it was called. And I remember that case where we got a message from Internet Watch Foundation that they had a crypto address that they suspected was related to child abuse material. And Jonathan, my co-founder, got that one and we looked into it, and we could clearly see that there's been a lot of activity in that wallet, and it was relatively big. And we could also see immediately that there was a lot of very easy avenues for identification of the users of that website, including the owner of the website where the money went in the end. So we could clearly see that there was a really good case. And then we started to work with different law enforcement agencies. It was a global case. There was like multiple countries, like tens and tens of countries involved, hundreds of people involved, and that led to the case where hundreds of perpetrators got arrested. 30 minors got rescued in the operation as well. So really one of the things that I felt was like extremely important, and something that was when I first heard about it, which was far earlier than it got into the press, but it was again like one of the times where you felt like, okay, this is really, really meaningful and this is extremely important. Other things that I would say is interesting is like we've been behind the biggest seizures of funds in the history of the US in any cases. We've been behind solving the fastest cybercrimes case ever with the Twitter hack that got like basically to prosecution in 10 days. And it's just like unseen in any other thing. So it's basically cybercrime is like to large extent fed by money, and money in cybercrime is oftentimes cryptocurrencies. And if you can follow the flow of funds and the money, you can actually solve the crimes. And that's been really, really hard before.
That's amazing. I think it's a true example of using some technology for good. Switching gears a bit. So I know the last 2 years have been super busy in crypto, particularly around institutions, traditional groups, banks, insurance firms, investment houses have all been spending more time in crypto. I'm curious on your take on just how successful traditional institutions have been in sort of ramping up to crypto over the last couple of years.
So I would say on the traditional side, what happened, I go a little bit further back than 2 years. A little bit further back, there was a lot of curiosity. They could clearly see it was interesting. And everyone who's in finance, they're not super risk averse, that like to play with things of finance. So most of bankers, or a big cohort of bankers, were already exposed to cryptocurrency privately, no matter their company policies. And that meant that there was a lot of interest here in the crypto space. And some early banks got into it pure from momentum. For example, in the last wave, crypto wave in even back in 2013, there were banks that got interested purely because they saw it move fast and maybe it was the time to jump ship or jump on it. And then what happened in the beginning of COVID, I started talking to banks and the tone had changed. They were basically in the early days of saying, well, this asset class have now been around for 10 years and it's not going away. And you probably need to find a policy around it. And also, hey, there's only this much gold in the world. And like, we need another place to put money and deploy money. So it's actually quite interesting to put them here. So they started to build actual strategies. And what happens in big organizations, financial institutions, they need a strategy. They need like a long-term plan. And then they're extremely good at executing it. It's not fast, but it's steady. And it's like determined. And when I saw that, I was like, something has changed here. It's not going to impact our revenue or the growth of anything in the first 1 or 2 years. But once it starts with this confidence, it's going to go really like, it's going to be big. And then when I look like over the last year, we've seen a lot of banks moving into the space. Some of them are not announced yet because they're basically doing it the right way, very cautiously, protecting the existing revenue and the existing business. And then they're moving into the space with a lot of conviction. And I think that's the change that has happened. So I would say, I'll not be surprised if the biggest custodian of the world of crypto will be a bank, probably an old bank, and that will happen over the next couple of years.
Yeah, absolutely. I think the last 5 years is probably the right window, but I think to your point, the last couple have seen tremendous growth. I'm curious on your take on what are the challenges which these institutions face, particularly for some requirements like know your customer, anti-money laundering, sanctions, OFAC, etc. I'm curious, so your take on the biggest sort of business problems and challenges these institutions face.
Yeah, so I think it's important to remember that finance is like extremely powerful and impactful. Movement of money is basically movement of energy. It's like the lifeblood of the world today. So it's extremely impactful. Now you take the world of finance and you marry it up with the time and space of the internet. Internet is global, that's the space part, and it's extremely fast, that's the time fast. And now you marry like finance that's extremely powerful with those two things. You now need to be able to do compliance in a completely other way. So know your customer in the old days would be like, yeah, I can kind of view your documents. You're here in person, so it's kind of easy. I can verify your passport. It's not that hard. And then that works. I probably know you already, so it's not that hard at all. That's not something you can do if it's global and you're interacting with people over the internet. So that needed to be solved. That's like something that many processes have been solved, and especially led by the crypto exchanges in building really, really strong KYC programs. Then when it comes to transaction monitoring, it's also complicated, and yet it's actually simple, because the nice thing about crypto is that you leave breadcrumbs, you build profiles on the blockchain, you can actually gather a lot of data around the risk of transactions, you can risk score your customers, you can understand what goes on. So that's another way of doing it. But the challenge here is that you want to do it really fast, because the internet is fast and crypto is just as fast as the internet. So suddenly you need to do things very, very fast. And that's where it's important to have capabilities in your system to do everything real time and get like signals when you need them. So I think these are some of the biggest, the bigger challenges there. And then the last part is like the due diligence that follows it, because every time you get an alert about something, you need to be able to dive into it and assess whether it's high risk or not. And again, speed is of essence. You don't want to let your customers wait several days for a signal on that.
So in the long run, would you say a financial world built on blockchain would be more or less sort of transparent and visible than the fiat system we see today?
So my dream from back in the beginning was basically we're going to rebuild the world of finance. It's going to take decades. And it's going to be like everything of value will move on a blockchain, and everything that is of value will move there. But it's also going to lower the price of building financial instruments. So there's a lot of other things that can be financed and build financial instrument amount that we've seen before, where we will see copies of very complicated financial instruments that we have in the commercial world. We will see them from like financing a car or a bottle of water, basically. So that's stuff that will change. At the same time, all of this is far more public. And there's two things that's interesting about that. Number one is everything is public. That's nice. But it also means that not everything will be easy to understand, even though that we are really good at looking at what happens on the blockchain. But you will know what you don't know. And that's another important part. So you can analyze what you don't know, and you've never been able to do that before. So that's a big change. So yes, it will be far more transparent than before, and it will require a lot of analytics and a lot of tools to be able to navigate, because it's also very fast and very complex.
Absolutely. Transitioning now to some of the things that you guys have built, I'm curious on the tools and products you've built to help financial institutions and fintechs succeed and sort of navigate this space.
Yes, so the first product we built was called Reactor. It's still around. It's still like our biggest main product, I would say, in many ways. And it's a very easy way to investigate what happens in crypto. It actually found a lot of different use cases. It's anything from like enhanced due diligence to investigating cybercrime to some extent also just understanding and navigating the crypto space and understanding what crypto looks like. So that's one of the main core products that we are selling. Another interesting one that's being used, and Reactor is being used both by the public sector and the private sector. It's basically everywhere. The product that's really focused on the private sector is KYC, Know Your Transaction. And it's basically, even the name is kind of telling that, like, in the world of crypto, by knowing your transaction, you get to know your customer. And what it does is basically connecting to a wallet of a crypto exchange or a crypto service business, and then real time analyzing if any of the transactions are being conducted are something that needs an extra look by a compliance officer or compliance agent, and then it will alert the team. And then you can investigate the alert, figure out like if you should do different triggers on them. And basically investigation happens in Reactor. It means that like you can really run business at scale. So even though you have hundreds of thousands of customers, you certainly have a scalable way of scaling your compliance team.
Absolutely. I think there's plenty of sort of users of these products. I'm curious on some examples you can share of the value of fintech or financial institutions drew from these two products.
Yeah, so I would say clearly just the ability to operate. So what happened if we go back to pre-2016, it was really, really hard for any crypto exchange or anyone in crypto to get a bank account. And there was many reasons for that. First of all, the bank would be like, hey, I cannot assess your business. I don't understand your business, and I have nowhere to look to understand what you're doing. It's not a pizzeria where I can go there physically and see that there's pizzas being sold, and it's kind of understandable. Selling cars, I understand that as well. But a crypto business, there's no way I can size it and understand the risk. Further on, regulators had no framework of regulating and no framework of monitoring and understand what happened. And we started early on to work with regulators. And in 2016, I think it's an important year because we certainly had a regulator of one of the major cities or like regions of finance in the world that were using our products. They issued licenses to one of the biggest crypto providers that was also a user of ours. And again, the bank that then provided a banking license, a bank account for this big crypto service business, were also using our product to monitor it. So it basically closed the loop, and it basically enabled the entire ecosystem from 2016 to have a path to show this can be done. And it didn't mean that everyone got a bank account overnight, but it meant that there was now a path you could follow. And if you followed that path, you're pretty certain that you would get there. And by the right investments, you could do it. And that basically bootstrapped the industry. That was a time where the price started to grow, where businesses could believe things, where people believed in an ETF, where everything started to change.
Yeah, so I think you guys added some much needed trust and safety to the whole space. I'm curious on, so I think it's quite clear that for investigations and compliance, the solution is almost indispensable. I'm curious on the new tools and products you're building to sort of take the value add further to your customers.
Yes, so there's a couple of multiple new products actually, but I think it's interesting to look at. I alluded to a little bit before I remember showcasing Reactor to a crypto exchange back in 2015, and the first thing they wanted to look at was basically, can I see how big the other crypto exchanges are? What are my customers doing? Not from a compliance point of view, but more from a business intelligence point of view. And that's always been like sitting with me that we can probably build a product around that at some point. So we built Playbook, which is like on business intelligence. We also have a market intelligence part of the website, and it's basically to help those businesses understand their customers better, understand like how they can give the best journey to their customers on their platform, understand what customers are interested in certain things and not other things, and give it like a way better experience. So blockchain interaction and Web3 is very different from the internet, because you might only interact with the service through your wallet, not through your browser, and not through your history, and not through Google, but through your wallet. And that's where we come in and basically can help and guide that the one that interacts with your wallet and basically connect your wallet to your service. Who are they? What should you help them with? What is the journey? What is the importance? And what are the signals that you can get from that?
Yeah, absolutely. I think we have a few minutes left, and we've sort of discussed your journey from the public sector to the private, to sort of going beyond, above and beyond for customers. So I think as sort of one of the first few builders in the space, you've seen all the cycles. You've seen from Mt. Gox to 2017. You've seen all the winters. I'm curious about this current part of the cycle, if you have any comments around, does something feel sort of different or sort of more of the same that you've seen in the past? Any advice you would have for sort of builders, entrepreneurs, as they sort of navigate the current climate?
Yeah, it's very interesting to see the current, I would say, crypto winter, because it's not just a crypto winter, it's just a winter. It's like in winter in finance. We basically have a financial crisis in the world right now, and every country experiencing it. And it's the first time we had a crypto crisis that just followed the rest. And for me, it's kind of refreshing, because it felt like crypto grew up. We're just like everyone else. This is not like unique anymore. We are not like a crypto winter that happens in the middle of like a spring that happens in finance everywhere else. This is just on like at the state of the world. At the same time, I also think there's an important thing to learn from crypto, because when we look at the financial industry today, we haven't seen a lot of scandals except for crypto. And that's because crypto is fast. If something fails in crypto, it fails really, really fast. Everything falls apart immediately. If there's a lot of leverage in the system and something tanks, it doesn't take 2 earnings calls to get to the red numbers and all the scandals. It happens immediately. And that's what we saw with 3 Arrows. You've seen that with the industry and the impact of like the Terra Luna in the industry as well. And it just falls apart. And we all know that like private equity has tanked, like the public market has tanked. We know that's the case, but we haven't seen what came out of it. And of course, they're leveraged in crossover funds, a lot of other things, but they're only going to fail after a few quarters when the earning calls comes out. And that's coming out in a few months from now. So we're basically going to see some of the effects that we already seen in crypto, in traditional finance later. And I think that will be the lesson from this winter, is that crypto will be the early warning for a lot of others, because it's faster.
Absolutely. So would you say the space is anti-fragile or fragile?
I think it's, and so for something that has been like basically called dead for like, I think hundreds and hundreds of times, I have to say it's anti-fragile. It is pretty strong. Of course, the businesses you build on top with tons of leverage, they become super fragile. But the system in itself is like very, very, it's very strong, I would say.
Love that, Michael. Appreciate your time here. I do hope the listeners have learned a lot. I certainly did. And thanks again to the SCB team for allowing us to spend some more time together.
Yeah, that was awesome. Looking forward to next time probably in person. So thanks so much.